Okay, so to get into this, I have to basically explain the stock market. The stock market allows you to buy and sell shares of a company. And based on how well that company is performing, or how in demand those stocks are, the prices go up and down. Basic stock market practice is buy low, company does well, sell when the price goes up, pocket the difference. However, there's a practice called short selling, which allows you to make money on a company that's failing. Basically, you sell shares of a stock to someone for a limited amount of time, and when that time period is up, they have to sell it back to you at whatever the going rate is. So if you sell at one price, and then that price goes down, when it's sold back to you, you pocket the difference. The problem is that both of these methods of buying and selling stock end up self-reinforcing. If you buy a lot of stock normally, the demand for that stock goes up and the price for that stock goes up. And if you short sell a lot of stock, then faith in that company goes down and the stock's price go down. So to a limited extent, investors can use this to kind of manipulate the market. Once again, limited extent, the whole legality of this is a whole other can of worms. Anyway, GameStop had been suffering because most video game sales had gone digital, and AMC was suffering because people weren't going to movies, both because of the pandemic and because more people are watching streaming media. So these companies were, more often than not, short-sold. Which, of course, makes them start to fail. Enter Reddit. Reddit has a subreddit called Stock Market Bets, which sometimes has good trading advice and sometimes kind of trades stocks for memes. Once again, I'm sort of shortening things here, but basically what happened is a whole bunch of investors short-sold on GameStop. And Stock Market Bets was like, you know what would be really funny? If we just all bought a bunch of GameStop and held on to it. And so they did, and once again, that behavior is self-reinforcing. So the price of GameStop stock went up from like $10 to over $300. Which means everyone who short-sold GameStop stock was losing $300 or more per share that they bought. And when traders do this, they do this by the thousands, maybe even tens of thousands. So it caused serious financial problems for major investors, and it made a lot of small-time traders pretty wealthy. But the problem is the stock market is supposed to be natural. Which is bullshit, it never really is, but you're not actually supposed to be able to manipulate stocks like that. And so many major trading platforms shut down the sale of those stocks so that they could limit the amount of damage done. But of course, that damage was just being done to big corporations, not to small investors. And so people got very upset because it felt like the deck was stacked against them. So in short, big companies bet on little companies to fail, and little investors got together to buy their shares and make sure that they didn't. This cost big companies a lot of money, which they did not like, and they restricted the ability of small traders to be able to do that. Or even shorter, Reddit done a meme on the stock market.